Cool. So I'm going to talk about tokenomics and governance, which, in other words, is money and power. And I have 15 minutes to tell you everything you need to know about money and power. DAO leadership, we work on this. If you don't have the leadership right and you don't have your tokenomics right, then everything else is just a fix. So why is this so important? This is a game, actually, and if you look at the biggest thing in this game, the biggest thing in the game is the advertising. And that's built in structurally, right? Because the people who own the game need to make money from the game. And so, as a result, the biggest thing is the advertising, because money is what's driving this. And this is a perfect example of what happens when the people who use the game, right, the players themselves, they don't have the power in the game. And when we talk about the decentralized world, people are starting to talk about staking tokens. And the idea of a staking token is that if I'm the player of the game, I should get to decide how the game goes. I should get to decide where my money, when I play the game, goes for development of the next feature. And if there's a lot of advertising, maybe it's even degrading my experience. And some of us who've been driving down the street may have noticed that the number of billboards that are on the street does degrade our experience of enjoying the city. So this is where it's really important to build it, because anything on top of that is just a fix, right? You can't fix this basic economic model once it's already been set up. So as you guys are investing in ICOs or creating your own ICOs, you need to think from the very, very beginning, where is the power and where is the money? Because afterwards, the incentivization can't be fixed. And when people talk about staking tokens, it's really important to differentiate between an earned token and a purchased token. Because if I earn money, right, all the money I've earned in my life, that would represent my reputation, right? But that's not the same amount as the money in my bank account, which is, you know, I could have inherited money, right? So if you buy a token in this game, you might have power if it's a staking token. So you need to make sure that your governance and your money models are separate. Otherwise, you end up with this again. And we're all very experienced in organizations and governments and companies where money buys power, so I don't need to tell anybody how that works. And people have been talking about how, well, yeah, but you can leave any time. You can just, you know, all you need to do is oh, here we have money and power. We just fork. You have a fork, so you don't have to stay with anything you don't want. But a fork isn't really democracy, right? A fork is like Catalonia. It's very expensive, and you can't just walk off anytime you don't like something. So this is some of the ideas from DAO Stack, from Matan Field, who's one of the leaders of thinking, what will a decentralized organization look like? And some of it might be some kind of spoken hub. We're not really sure. It's very difficult to know what we're going to end up with. So I won't go too deep into this and voting rights and stuff, just because I'm talking about power and money, and I only have 15 minutes. But we just don't know. And that's the most important thing to say, is that as we're creating these new foundations, as we're creating these utility tokens, as we're talking about an economy and an ecosystem, we're not really sure where we're going because we haven't done it yet. We know of some economies like that and some ecosystems like that, like Wikipedia, for example. Wikipedia isn't a centralized organization, it's open source projects. The internet itself, right? And they're very successful. But we still don't know how, as humans, we're going to organize ourselves in these ways. So I'm just going to talk about the main ways that we do have tokenomics today. There are three main ones, and then I'll talk about a hybrid. The first one is a security token. Everyone knows what this is. This means you own a portion of the company, right? If it's a security token, if you're an investor, and they say it's a security, you're like, I want to know if I get profits, do I get royalties, and do I own any kind of voting power in this organization. And the main difference between an ICO and what we've known as private equity today is that with an ICO, the founders are coming along with the term sheet instead of the investors coming with the term sheet. There's a lot of benefit right now for companies that want to just raise capital through an ICO and be a for-profit company, and that's a security token. And if it's a for-profit company, it probably should be a security token. And if people are telling you it's a for-profit company, but a utility token, you should be worried. Because that means you're not guaranteed any kind of profits. You own this utility and you hope it goes up in value, right? On the stock market, you do hope things go up in value, but you also get some dividends and some voting rights. On the stock market, also these companies already have to have a product and a valuation. But if somebody has no valuation and they're telling you you're getting this kind of share that hopefully will go up in value, be very wary, because that's not really how it works. And how it will work, it may work. Another danger is that these companies that are doing security tokens and they're for profit, they're like, it'll go up in value, but what if it doesn't? They're like, well, we are going to buy back some of our tokens to keep the value up. But when your currency sinks, there is no amount of money that you can spend to make your currency float again. And so these people are going to be ending up spending operational cash in order to get their utility token to go up in value. So if it's a for-profit company and you're expecting to get any share of the profits, a security token is probably the way to go. And also if you're a company yourself, you want to share with your investors. Those are the people who invested in you. So that's pretty simple and we understand it, but a lot of people are confusing it. They're like, well, yeah, but it's a for-profit company, but a utility token. It's very unlikely that that's going to work very well. I just took this off the internet. It's nothing I've ever worked on, but how do you know a utility token is going to make any sense? I mean, what is this? All right, so what kind of company is a utility token? We don't even have a name for that company. We're just calling it a decentralized organization. But the idea of these companies or organizations is that if the rest of the world didn't buy their tokens, it could still kind of function. And if you see something like this with a lot of players in it, and it's kind of confusing, and you're not sure who's buying what from whom, that looks like an economy. If you look at your country's economy, it's a lot of different people using money for all kinds of different things, and some people are buying and some are selling, and you're not sure where all the money flows go. That's how a currency works. It could be a closed system. And this is most common right now. What we're seeing is in particular in big data. So when you're talking about big data, the biggest problem with, let's say, facial recognition, medical records, any of those areas, is for AI and big data to work, you need so much data that one company can't possibly have enough data. And in those areas, you're going to need a consortium. And data is very valuable. And so people are buying data. Governments buy data, companies buy data, app developers buy data. And the same people even sell data, right? Governments have data, app companies have data, sensor companies have data. And so in many areas, in particular in the area of big data and artificial intelligence, we're seeing these kinds of models. Healthcare is another one. There's a whole ecosystem. And if tomorrow you could barely trade their tokens, you could still have an ecosystem within where people are buying and selling data using their special data tokens. And so I would say that if you're looking at a utility token, the first thing you want to look at is this a big enough economy for it to be separate from other economies? And I think that if you have about 2 million people using it on a daily basis, that's about right. Like that's sort of the minimum. And I'm saying that because there are countries with 2 million people and they have their own currencies. So that seems about right. And then the second factor is you're not selling back to the bank. People are selling it and buying stuff from one another. If you see a token economy where it's always like, people buy our product with our token, the tokens are always going back to the bank. And that's not a circulating economy. In a utility token economy, again, we don't really know how this is going to work, but these tokens can have staking value, and you may have all kinds of ways that use of the economy will buy you some kind of power, and it should be used. Like how often you use the token should have a relationship to how much you care about the system, just like a gamer, right? A gamer who uses the game a lot should have more power than somebody who's just holding their gaming tokens. So that's the kind, and in gaming we will see this as well. In fact, we already do, right? Gamers have their own in-game economies. They sell their magic swords to one another. They sell their magic lands to one another. They charge admission in their funny money. And those really look like an economy. And if you can't ever sell your gear from your from your game outside, the game still functions. In fact, it functions just fine and everybody's happy. And that's really the idea behind a utility token. Asset-backed tokens are also, we also understand them well, but we don't know how this is going to work. So an asset-backed token could be something like precious metals, diamonds, those kinds of things, right? We're going to hold these assets, and you're just going to have a token. The interesting thing about asset-backed tokens is you can now break up things that you didn't used to be able to break up. So if you've got a precious Picasso painting, you could own half of it or a third of it through tokenization. And the same with big construction projects. We want to build a new marina. You could buy a new marina by having a token that represents your share of that marina. And this makes a lot of assets accessible to people who would not necessarily be able to do this. So far, we've seen a lot of talk about this, and it's not really clear how that's going to happen, right? If you're going to be buying a token that represents building a marina, how do you know who's building it? How do you do the research? How do you make sure that if that right is sold, that you got the right amount? It's still very complicated, and we haven't figured out all of the answers, but we do understand what this means. And the thing that you also want to look out for when you're thinking about asset-backed tokens is the overhead. If somebody is running an ICO today, they're spending between $500,000 and $1 million before anything else. So if they're saying, okay, you're buying whatever it is, a pile of gold, and every token represents a certain amount of gold, an ounce or a tenth of an ounce, well, what about that $1 million you just spent marketing the ICO? How are you going to buy $1 worth of gold with $1 if you're already $500,000 in the hole after you ran the ICO? How are you going to pay your salary? Right? How can one token worth, like if you pay $1 for a token, how can it really be worth $1 worth of gold? I mean, if I go and I buy $1 worth of gold, I got $1 worth of gold. But if I got to pay somebody's salary on top of that and somebody to put it in a safe box for me and all those things, it's very hard to understand how those kinds of assets are really going to have a one-to-one value. So if they're telling you there's a one-to-one value, you have to find out how they're doing that. Because if they don't own the mine, their overhead is going to eat out of every penny that you put in, every dollar that you put in there. So that's asset-backed. And the final one we have is this two-token economy. And this was invented because of the Securities Exchange Commission in the United States. And the Securities and Exchange Commission in the United States said what I said in the first slide. Dude, if you're making a profit, it's a security. It's not a utility. It's not a foundation. And so these are securities. And so immediately in the United States, everybody got, well, subpoenas is what they got. But after they got that, they all went and rushed and got to their lawyers, and they went everything as a security token. But now people are doing ICOs in the United States are saying it's a two-token economy. We've got a security token and a utility token. And as they describe this utility token to you, you realize it sounds just like a loyalty point. It sounds just like a frequent flyer, mile. And it is. They're just calling it a utility. It's never going to get floated on an exchange. I mean, you can't float your frequent flyer miles on an exchange. It's never going to be fungible. Well, it might be, because there are starting to be exchanges just for loyalty points. It's starting to be a world where you could exchange your Starbucks loyalty points for your Lufthansa loyalty points, but they're still loyalty points. They're still controlled by the company. And the problem with loyalty points is, I know that we say frequent flyer miles, but who knows what the heck a mile is anymore? And if you fly 10,000 miles, they give you 1,000 miles because it's owned by the company, and it's a liability on their balance sheet. So if you have a loyalty coin or utility token, you have to recognize if you've made a promise of future goods, this is a liability on your balance sheet. And so this is one of the things to look at when people are telling you that they have a utility token or a two-token economy is, what's the liability of on your balance sheet if every time somebody buys a security token, they also get a utility token? Because you're promising somebody some goods in the future, and that's a liability for you as a company, and how are you going to supply that? Right? If you've given 1 million tokens away, you've got to give 1 million whatever's worth, dollars worth of goods. And so I'm really not a big fan of the utility token like the combined utility security token model, it sounds good and people are, blowing a lot of smoke, but it doesn't really make any sense. At least I haven't seen one that made sense. And I've seen a lot of people tell me a lot of stories. So that's really what you need to do. This is the book we've written about, the mindset, the management tools, and the communications tools that companies need to create this. And really, as you're investing and as you're creating these companies, you need to look, are the foundations set properly? Because based on your foundations, that's the kind of company you'll get. Thank you very much.